Okay. Good morning.
Rex got a note. Jim, Rex, Mike, I see Spirit.
Good morning.
Spirit.
The three of them. Thank you for braving the elements to be here for this final meeting of 2025 for the board of directors of the Columbia Economic Development Corporation. Want to welcome Riley Werner back to the helm of Zoom. And we've got a busy agenda today, and we're going to begin with the audit committee report. Mike, can you give us an update on where things stand with that?
Yes, Lisa has for you a copy of the evaluation for our audit request for proposal. As you know, we've been using UHY for several years after they acquired Addison Cosby. And we decided to go out for an RFP, both for CEDC, the IDA, and the Capital Resource Corporation. We sent out the RFP to 6 firms, 2 responded, UHY and RBT. RBT is out of the Mid-Hudson Valley, and they had bought the Sigler firm. It was an interesting process since I've been a client of UHY for 40 years personally, and I'm on board with Mike Turturro, who is the managing partner at RBT. But we had all of the responses go to Lisa. They were asked to put the pricing in a separate envelope from the actual scope of work proposal. The goal here was to test the market. We were not unhappy with UHY, but over the years, particularly after the roll-up, the fee increases were at the high end of what I thought the market was consistently year over year. We asked them to provide a bid for each of the entities over a 3-year period, and indicated in the RFP that even though they were separate entities, that we wanted to keep all of the entities with the same firm for our own administrative convenience, and therefore the total price would be how we would make the evaluation. With Columbia Economic Development, and we asked for a 3-year proposal. RBT was 14.5% higher than UHY. UHY was at 116, they were at 133. With Columbia IDA, actually RBT was $3,700 less, but on the CRC, and that's a little harder to read. I should have put a gap between the total, but they were UHY was at 3364, and RBT was at 8,000. One of the things that we had missed in the RFP for the IDA and the CRC was we included a request for pricing for services for a 990 and a charity 500. Those entities don't require that. It was interesting that RBT gave us a price for it, I guess because we asked for it. But I would have expected they might have said to us, well, those entities don't require filing because they're not process. Yeah, it wasn't the trick question I intended. But, so as you can see, for the total, the 50 versus 58, 52 versus 61, and 53 versus 64. So it was clear that the executive committee met and is recommending to the board that we retain for the next 3 years UHY. It's a year-to-year contract, so if there was something that made the board not want to continue, But if they do want to continue, this pricing is available, for all 3 years.
Questions, comments?
I think what it did for us was, gave us a sense that UHY was in the market, but at the top of the market. They're at 43 CEDC, they're at $40,000 this year. If the 3 or 4% increase would have brought them to 42, and we're gonna get them for 38. So it's about a 15% reset. So, hopefully, and as you can see, by year 3, they'll be at 40, and we probably would have been at 45 or 46. So, it's I'm pleased with the outcome. I appreciate RBT participating. And we have used RBT on occasion for some accounting advice where UHY, as the independent auditor, because of our federal funding, isn't allowed to give us guidance on how to book a particular transaction or clean up our balance sheet internally. Mr. Treasurer, any questions?
No, I thought it was a good exercise. I think it's important to go to market periodically. Getting a little bit of a price cut's good. And to Mike's point, I think we've been satisfied with UHY. I've had no questions or concerns with them over the years.
And on the first week of, I think it's Tuesday, the 6th, I'm having a kickoff meeting with the auditors for 2025 audits.
How many firms did you put it out to?
6.
And you only had the 2 responses?
2 contacted us, the 2 local firms, Shallow and Ackerman, both said they don't do government work. Bonadia was the 3rd firm, and they did not respond. And I'm trying to think who the 4th firm
I'm
was.
just curious, because I'm thinking of doing the same thing, so.
We stayed away from, the big,
It's a difficult in between space with the government money that we get, and the size is like a tough middle ground that smaller firms might not want.
the managing partner of KPMG was upset when I told her that we weren't gonna ask her for a quote. She said it would cost us that to put the proposal together.
We just went through that at the college, Mike, and we had a similar response.
I couldn't hear what she said.
Victoria, we couldn't hear what you were saying. Could you repeat that,
Oh,
please?
sorry. Yes, I just said we went through a very similar exercise at the college and our response rate was about the same.
Thank you.
Thank you. Who did you pick?
UHY.
Well, the good part is, I think it was to give really their corporate, structure, a message that, they're in a market where they, have to be more cost conscious.
If there are no further questions, I'll entertain a motion.
So moved. First, should I recuse myself, Andy, if you agree, since I'm partners with?
There's a motion.
Second.
All in favor?
Aye.
Anyone opposed?
Really wasn't because.
Motion is carried. Thank you very much.
Really wasn't because I got the.
On to the loan committee report, beginning with the portfolio dash.
I won.
I will.
Thank you, Jim.
Absolutely.
The report is on page 2 of your packet. I think the board is familiar with the 2 loans that are in default. That is loan client A and loan client B. But I will address the other 4. Starting with loan client B, we received the payment yesterday. They are now current. C, E, and F, we have reached out to all 3 and we're hopeful that we will receive a payment before the end of the month. Are there any questions?
Motion to approve the report.
Second.
All in favor?
Aye.
Anyone opposed? Motion is carried. Thank you, Mark. There are no loans for us to act on this month, but there are loans in the pipeline. Okay, Mike, over to you for the president and CEO's report.
Thank you. If we go to the treasurer's report first, page 3 is the balance sheet. Our CEDC loan cash and our SBA loan cash are both up approximately $96,000 for almost $200,000 aggregate. It's primarily because we drew down additional SBA funds and we had some repayments on the CEDC loan fund. But it also shows the hard work that Martha and Steve have done to keep the loan fund on the street. We currently have only $770,000 available to lend. And the balance of the loan fund is loans receivable. Sorry, we have 771 in the CEDC cash account and 500 in SBA. So we have $1.2 million to lend, but we have $2.5 million on the street. It's really hard to when you're doing loans of $25,000 to $50,000 with 5 to 7 year amortizations to get the money out as fast as it's coming back. And so it really becomes a challenge. And Martha and Steve, I don't know if offhand you have an aggregate yet of how many loans we have done this year. But certainly in the
37 and just over $925,000.
so, and at the same time, we did want to lock in getting the additional $1 million approval from the SBA when it wasn't clear whether the SBA going to continue this or other programs. Unfortunately, they are continuing the micro loan program. And we have about $650,000 left to draw down on that, which isn't in the numbers that we're talking about. But when we draw that down, you know, the total portfolio, when you take the amount of loans on the street, which is loans receivable plus the loans available, money available to lend, we're at $3.8 million. And you know, over the last 10 years, we've done over $6.2 million in loans. So I think it's really credit to Martha and Steve, and to the extent that Lisa and Kathy Leiden, our bookkeeper, are involved in running the loan program. It's really impressive operation and a strong component of the CEDC. Our cash is down 124,000, primarily due to 55% of that is due to the fact that we're waiting for SBA payments, which were late because of the government shutdown. The only other major differences from the previous year are in accumulated depreciation, the right to use asset, and the lease liability, which are all accounting function. Our allowance for loan losses down $15,000 from this time last year, but we did have some small write-offs. And our OGS grants are up because Return Brewery drew down another $114,000 on their grant. And again, that's a grant where we book an asset and a liability because it is basically a loan, but it's forgiven if they're reach their job goals over a period of time. And as you can see, our loans payable to the SBA are up $126,000. So our total equity is at 2.8 million, up $47,000. So you can see it's a pretty stable balance sheet, and the changes are either because of you know, accounting requirements or the loan program. Any questions on the balance sheet?
Two CEDC loans that are significantly aged, fully reserved for at this point.
We can get into that when I go through the. That's fine.
Sure.
We were going to talk about adding some money from the this year's net income to the loan loss reserve. On the P&L.
Page 6, is that correct?
Page 6. Our administrative revenue is down by $10,000, primarily because of two anticipated IDA projects that did not close. We have good news. The top of Warren Street, the Crescent building, where it's I guess the old Ackerman appliance store or the Packard showroom, closed yesterday. So we will be, we did book for December a $10,000 fee pursuant to our agreement with the Hudson IDA. So we will catch that one up. Our bank interest was down by 3,400, primarily because our cash is down. But our loan interest is up 13,000, based on Mark and Steve's getting out almost $1 million in some loans. So our net was positive 10. Our membership is off budget by 22,000, and we'll have a brief discussion about that as it relates to next year's membership drive. Our grant expense is up modestly because of the $114,000 that I indicated was booked for the Return Brewery on the expense side. And we're off on SBA interest, $10,000. And that was primarily because I miscalculated the fact that I used the during COVID interest, and during COVID, they had not charged us interest on the SBA loans. But this year we have that in the budget going forward for a if you look at the total income line, about a third or 2/3 of the way down the page to the far right. In terms of income, we're at 99.14% of budget. Sorry, we didn't get closer. On the expense side, again, you can see that we're down in every category except grant expense and some land bank expense, which I'll discuss in a minute, and our SBA interest. And for the January to November reporting period, our expenses are 88% of what we had budgeted, giving us a net income of 104,000. Again, primarily on the expense side, it was not filling the staff position. So again, I think we had a good year. I think that, you always want to make sure that you have spent sufficient funds beyond your staff so that you can demonstrate that your staff actually had resources and ability to get things done. And if there are no other questions on the finance report, I'll request, Mr. Chairman, that it be approved.
Is there a motion?
So moved.
Second. All in favor?
Aye.
Anyone opposed? Just carried.
With respect to Brian's question, our SBA loans have two components of loan loss reserve. One is we must maintain 15% of the outstanding balance to the SBA in cash accounts. And the other is we carry on our bad debt line in our balance sheet, a component of that number is allocated to the SBA loans. Three things happen if an SBA loan defaults. One, is it 3 months or 2 months that we have to?
It's actually 4.
4 months?
Yeah.
If it's 4 months late, we have to call the loan. Our first line of defense is to get them to stay under 4 payment late. Second is to buy out the SBA loan with CEDC money and restructure the loan in the hopes of salvaging the client, which has worked many, many times. The third is to put them in default and use the cash in the SBA reserve account to recalibrate. When you write that loan off, we have to pay the SBA out of that fund. Then you have to go back and see what funds are left in that tranche and recalculate the 15%. And if you're out of the money, you have to put money in out from your operating account. Right now, we are our loan loss reserve cash is 354,000. 15% of the 1,600,000 that we owe the SBA is, 240. So we have, $114,000 in excess reserve in those cash accounts. But that gives us the capacity to draw down an additional $766,000 of SBA money to meet the 15% test on the balance that we have, that we haven't drawn down out of the million. So, and that's about 650. So, we're in good shape there. And that SBA loan loss reserve gets released every month for the amount that we pay down the SBA. So I think from the SBA cash position, we're in good shape. The allowance for loan for bad debt. Right now, we're carrying 188,000 in the CEDC and 120 on the SBA for a total of 308,000. Martha and Steve go through the loan portfolio quarterly at the direction of our auditors to make a determination as to giving a 1 through 6 rating as to the risk related to each of those loans based on their payment history. Right now, when they went through that process, they were at $55,000, but we only have 308 in that account. Interestingly enough, if we would have to have a 45% loss on the SBA account to be out of the money, and or I'm sorry, on the total account, and we've never had anything like that. But I think the loan loss, the bad debt number right now is 12%. I'd like to get it closer to 15. To get it to 15 would be $75,000 of additional funds for the bad debt account. I don't, if we come in at 110 or $120,000 in profit, I don't have an issue going to 75. But if you want to show some profit, yeah, but I'd like to see something in the $25,000 to $30,000 net income at the end of the year, and I'd like to have authority from the board to put $25,000 to $75,000 in the reserve account based on where we are at the end of the month, and we'd allocate that 50-50. If we did have a run on one or the other accounts, there's nothing that restricts us from reallocating it. And the benefit of having that money is that if there was a write-off, you're writing it off against that account. You're not writing it off against the income of the current year. And so I think that, and Martha, with respect to the 2 accounts, perhaps we could have a brief executive session for Martha to update you on the status of those at towards the end of the week. So if there aren't any further questions on this, Martha and Steve and I looked at it, and I think every year that we've had a surplus, we put 25 to 50% of it in the reserve account. The accountants used to argue with me that we were putting too much away, but I've been on a bank board for 30 years, and the answer to that is cash is king. And basically, although this is a paper account, it's cash, because if you don't have it, you have to take it out of your earnings from the year that, and I think it was only 1 year that we've had a negative net income. And that was the first year I was here when we wrote off significant debts relating to a fish farm and to a hotel property in Greenport, where we figured, I was only here for half a year, so Martha and I looked at it and we cleaned up the balance sheet. Any questions?
The auditors brought up the allowance in the past couple of years, I guess, maybe.
Yeah, well,
I'm sure it's one of the major areas they look at.
that's what they want to look at first. And I think, the difficulty is when you've done $6.2 million in loans and only have done about $180,000 in write-offs, if you include this year, you get comfortable. And you know, when you look at the pressures on small business and you look at the fact that, you know, small businesses are. I was particularly concerned about the craft beverage clients that we have, and we did take a closer look at that group because, you know, even in Saratoga County, you're seeing 2 or 3 of them closing or reducing from 2 sites to 1 site. So, you know, you do want to be sensitive as the economy slows down a bit. But I think that we are in pretty good shape. Because again, if you take the 300 and that would bring this account from 308 to 360 if we did 50. And you know, our outstanding loans are 2.5 million. So, you know, you'd have to have a pretty good run on debt and structure the way we manage the loan fund of extending, you know, giving you a second chance, giving you a third chance. I think is the reason we don't have the write-offs that others would have. You know, a bank wouldn't see this accommodating to you because the regulators wouldn't let them. So if there's no other questions, I'd request that approval to consult with our treasurer to add additional money to our bad debt reserve between 25 and 50 and 25 and $75,000.
Other questions? Or comments? Is there a motion?
So moved.
Yeah, I'll second.
All in favor?
Aye.
Anyone opposed? Motion is carried.
And as I said, we would need to put $71,000 to get to 15%. 50,000 gets us at 14.15. And right now we're at 12.18, so. Okay. Moving forward, you know, we have had we've done the UHY audit, we've done the bad debt and risk rating. You'll recall that a year and a half ago, we received a $120,000 grant from the Connect All office, the state's broadband office. It required that we put $30,000 of cash or in kind into that program. It was originally structured as a scope of work that would have had us engage in outreach to schools, libraries, hospitals, other facilities to assist in providing ways to get people to be more aware of how to use the internet now that it was being brought to them. Now that we're down to about 500 addresses, I talked to the state about recasting the scope of work. I said, no, it really doesn't make sense to do what was proposed. And in consultation with them, they came back and said, would you be willing to undertake a cellular phone service study? And utilize the money for that purpose. So I talked to our consultant, and you know, he has the capability and to do that. The state did hire a consulting firm to go out statewide and do some of this work. I think what they want to do is take that higher level data from that study and have us use Columbia County as a test case as to how to test whether that data is useful or not. The new scope, so what we did is we agreed at their request to take $60,000, 1 year of these 122-year grant that they had awarded us, and reallocate it to survey sites with joint input from stakeholders, community to look at we would survey 108 locations in the 18 towns in Columbia County. where, and we would use some of the data that they had previously got from their other consultant. And it's very technical as to how they're going to do this. They're gonna have a survey crew measure the wireless strength in decibels and milliwatts. But I guess the wireless service is dependent on whether there are leaves on the trees or they're not. I mean, and so not to get into all of that, but the state has approved the scope of work. And I think it's important to have board input to determine whether you're willing to support us going from the application that you approved that we submit a year and a half ago to shift the scope of work to this broadband effort. The mobilization all in, it's a $60,000. It's half of the grant money. I think it's probably the most secure grant that I've ever had because they've asked us to do it. And they've reallocated the money. Often the risk with a grant is, will you truly match the scope of work and will you get paid? So I don't see this, because all of these grants are reimbursable. We do have to come up with $15,000, but that includes in-kind labor. So my time and any time that anyone else in the office works on it can be allocated towards that. And we do have this money budgeted for next year. It's just that the original scope of work was for a different purpose. I asked them to keep the second 60,000, either for a continuation of this work, if they wanted us to expand the scope based on the preliminary data that we collect, or back to some of the ideas that we were going to address in the first scope of work. It's very unusual that they would come to a grantee and ask them to do this, but it has been approved by Josh Freibert, who is the head of the Connect All office, and he also has approval on this from ESD.
Mike, who's the end user of the data that's going to be generated by this report?
I think that's one of the issues. The data will go to the state, and the state is going to try to use it to share it with the telecom providers to encourage them to put cell towers in areas that would serve these gaps. I told them we are not getting involved in being the site selector or recommended site selector for cell towers. And
So you're just simply gonna be trying to review where it has good cell phone service, where it doesn't.
Do you think that 108 locations is enough to cover Columbia County?
that's as much as the money would go. And I figured that if they like, and I didn't want to commit to 250 and find out this doesn't work and they don't pay us.
Right.
You can put it on Facebook and get a pretty good narrow them down right away.
I get a call every day from someone in Germantown who when they go down in that gully, but that gully may never get cell service.
Yeah, I mean, definitely over rivers, but it just makes me think of on the way to the Rhine Cliff Bridge also, because that's a terrible spot, but that's Dutchess County. Does that
Yeah.
mean like I don't get to test that part?
Well, I just think that you do when I was at CEG and Global Foundries came, we had the mayor of Dresden come to tell us what his experience was. And he said, just understand, when you dance with the bear, you dance till the bear stops dancing with you.
Mhm.
So if the broadband people want us to do this and they're willing to give us the money, and we're doing it in small increments so that we're not taking significant risk and we have the ability to keep their attention.
Yeah.
And the benefit is that they can use it to force providers to upgrade.
Yeah.
But without getting into going in and saying CEDC is telling the town of Hillsdale they need to put it on your property in your
Do we
backyard.
have a say as to those 108 locations? I'm just wondering, do they
Yes.
test at places
Well, we do,
that
but-
have strong Wi-Fi zones?
But we're gonna use their data that they've already done with their other consultant.
Yeah.
And yeah, I mean, we are going to talk to the town supervisors, and I don't know that, I don't know that I wanna go on the newsletter and say,
Yeah.
tell us the site. but we have $60,000 more that we can do if this is successful. I see that it will result in using the other money and them giving us more money. But
Is this-
we know that cell service is the next big thing. And
Yeah.
I think they saw that what we did with broadband, primarily because we were a small county. It wasn't rocket science, but we had 25,000 addresses. If you had $250,000 addresses, you couldn't have done what we did. But we became a pilot program for them, and I think they see us in that role again.
What's the timetable, Mike?
6 months.
And you're just gonna continue working with,
John McAdoo,
Yeah.
MNC Fiber Services, and they were very happy with that. John was on all the calls. John, redid the, proposal for them. We tailored it twice to what they wanted.
so them and you will try to get in touch with the current cell phone providers, et cetera.
Yeah.
As at a local level and,
And, some of them are already doing it. And
Yeah.
I think you saw the success that we had with the broadband was our ability to work with all four of you.
Mm.
And that only had happened because of COVID.
Yeah.
Before COVID, none of the providers would share any data for fear of proprietary, encroachment, by the provider on either side of them. But when we went to the providers and said, the school districts, have kids who can't get their work done because they don't have service, most of them stepped up and gave us those remote gadgets that go with the cell phone, right?
I can't speak for Dave, but I was never asked prior to COVID, but he might have been, and he might have said no.
Well, it was particularly, Consolidated and Spectrum because
Yeah.
of their corporate,
Right, yeah,
they had to go so high up to get permission. But once they said, well, give us the addresses of the kids that don't have service. And they immediately came back to us and said, well, they do have service, but they can't pay for it.
right.
Or we have, if we give them this
Yeah.
$250 a month
It's
gadget.
the same for us. A lot
Yeah.
of them,
So,
could get service.
I said, well, now you can give us the data. If we ask you an address, you can tell us whether you have service. And they used to tell us that was all proprietary. And, it was all in good nature. And, I said, you kind of opened the barn door here. And,
Yeah.
that's how we're able on a quarterly basis to go out and work with you to narrow the list in a way where we're very careful not to
Change.
cross pollinate data.
COVID changed so much,
so- So I do think it's a real positive that they're asking. I don't think there's
Yeah.
a lot of risk. And it's an area where, if we get some good data, we can take credit for moving forward the cell service, issue in the county.
And historically, as providers, they're not the easiest to work with or communicate with, so the fact that they are doing that on their own with you, I think speaks
The interesting thing is that,
highly.
most of the cell service issue, or no, a good portion of the cell service issues here are because if there's not a lot of pings on a tower.
Yeah.
They're not upgrading. If you have a tower at Wolf Road and, at the Albany Airport, you're gonna keep that tower with the latest technology. If you have a tower outside of Hillsdale and it's got a third of the usage, they're not coming in and putting in, the upgraded,
Right, we own quite a few towers in Green County and, most of them have cell providers on them, but yeah, the upgrades are few and far between.
Mike, we do gather data at the college on digital access because it's a huge inequity for a lot of our students.
yes.
So we could probably provide you with some context too from our perspective.
Great. And we continue to work with the regional digital equity group and with Anne Marie Landsey and her team. So I think that would be a good connection and demonstrate an area where we've actually made some progress.
Absolutely, yeah.
So, Mike, are you looking for a resolution of the board?
Well, it's a $60,000 gig, so I'm only good for 5. So I thought I would ask you for approval to amend the scope of work from the original half of the original state grant at the state's request from a broadband effort to a cell service effort.
Is there a motion to do so?
So moved.
Second.
All in favor?
Aye.
Anyone opposed? Motion is carried.
The next item that I have is, Chris Brown and I have been working on, sites for a number of, projects. We've had a request, to see if there is additional land that adjoins one of the, owners of property in the Commerce Center. In fact, they're currently encroaching, a bit on our land. And, they want to see if we could expand their site. Their site is adjacent to a wetland as well as, to the, airport runway access. We have had conversations with the county, and, the people there who work with the FAA. They don't think it is an issue. The property is owned by the county IDA. The process would be for, if we can identify sufficient property, that we would, do a lot line adjustment, and we would, sell on behalf of the IDA, the parcel with the approval of the Board of Supervisors. And, as in the past, the proceeds of the sale net of closing costs would be directed by the supervisors to be transferred from the IDA to CEDC for future, economic development purposes. The last lot we sold for 50,000. I think we got 47,000 transferred to us, at the, when the sale was completed. And that we put on a restricted, basis. But to me, it's an insurance that if, we had something we needed to do that the county wanted us to do, they don't have to go through an appropriation. The money is here. It's basically, pre-funded. So doing that, I need to, as the seller of the property, I need to go and can't tell the buyer, who doesn't know if he's gonna get to buy it. We need to do some work with, an engineering firm, and we've talked with Crawford Associates. It's, a $2,500 expenditure, which, normally I would just make you aware of it. But in the context of this, we've also, looked at 3 other, properties related to housing. One is the site in Greenport that the housing project, has floundered because of new wetland issues and potential, issues with the Greenport sewer plant. And the other are 2 projects, for, affordable housing that we may or may not be able to be reimbursed by the land bank. The reason I'm bringing it is in the aggregate, it's more than 5,000. And, basically, we would, like to move forward with 2 of them at this time. And, Chris, what was the other 3, which of those would you want to do first? Without naming property owners.
Yeah, I think, Route 9.
In Stockport or?
Yeah, technically it's Stockport, but again, that's going to run into the issue of Greenport's water system, sewer system, which is currently under a consent order. Then the other one I think I want to take a look at is the mill.
And the mill is in Valatia. We have talked about that previously. And again, to the extent that the land bank is involved, they would reimburse us. So again, I don't know that I need approval, but I felt that because, all of a sudden you saw $5,000 or $7,500 payment to Crawford, you'd say, well, wait a minute, that's over the $5,000. I do think we've done this a couple of times. We did it, when we looked at the potential housing project across from the Taconic Hill School. We did it with respect to, looking at, the old cement factory, cement property. We split the cost with the owner of, seeing if it could be developed into a technology park. We did a $2,500 split with a developer out in, Claverick, where, we were trying to get, it was the property at Gay Bauer Road, 30 acres, where we were trying to get him incentivized, to do a private sector expansion of the Commerce Center. And we could have gotten him infrastructure money, but, that's still pending. I think it helps us push projects forward. And so, if you would like to take a vote, or if you just think that, it's useful to have been, updated, I'll leave that to your decision.
Is there a motion to authorize our president and CEO to proceed with all you just described to us?
Again, pending cash flow.
Is
So
there-
moved.
So moved.
Second,
All in favor?
Aye.
Anyone opposed?
And certainly with the Commerce Center site, to the extent that we have cost in it, we'll add that to the purchase price. Well, thank you. We had a very busy time with the Hudson IDA. As I said, we did close on the $14 million Crescent project on Warren Street. You may have seen the article in the paper about the controversial Elks Club Hotel.
Merry Christmas.
Merry Christmas. We, that was passed. The developer had come in and asked for $4.3 million in benefits. As you may have read, I regret having said it was dead on arrival, but, that's what I told the developer. And, they, ranted and raved that without that, they weren't gonna be able to go forward. And they wanted to negotiate. And I said, well, negotiations, I'm at $1 million, you're at $2 million, we split it $1.5 million and we go out and have a steak dinner. I said, this is about the public good. And it's not where we're gonna split the difference. We're going to tell you what we think the community is willing to provide. When you look at it, afterwards, we got them, the board approved 2.7 million. When you look at the city, where most of the criticism came from on social media, they tell me, I don't listen to that kind of stuff. The city was giving up 30% of the real property tax exemption, which was about $500,000 total. They were giving up 50% of the mortgage recording tax, which was $300,000. And they were giving up $100,000 of sales tax, because the city only gets 6% of the 8% that the state collects. I'm sorry, but they get less. The state gets 4%, the county gets 4%, and the county gives the towns and county and villages 30% of their 50%. And the city gets 13% of that 30. So they're gonna give up $400,000 in benefits or in exemptions based on out of the 2.7 million. The bulk of it is the state sales tax. So the state's giving up $1 million, well, over $1 million between state and of it. What were they gonna get in return? Over 10 years, they were going to get about $350,000 in pilot payments. They're gonna get $1.9 million in bed tax at a conservative 50% estimate of hotel revenue. They were going to get their share of the sales tax on the hotel and restaurant. They're gonna get over $3 million in benefits for a $400,000 investment.
The state is,
The city.
oh, the city, okay.
So they're gonna get 6.6% return. Now, well, if they did it anyway, they would have gotten the 400 too, right? They would also have gotten the 400. But it also, they get a $468,000 IDA fee, which wipes out. If you took the projects and looked at them, if the IDA gave them nothing versus what they gave them, including the IDA fee, the city would be $27,000 worse by letting them go forward
No,
with no benefits. And it gives the developer, he's getting 5% of their project costs. And when we went back and compared it to the pocketbook factory, the Elks Club is getting 4.86% and the pocketbook factory got 4.34% of their project costs as a benefit. And so it's hard to explain. Because it does look like corporate welfare.
Yeah.
And, but at the end of the day, we don't know if they'll move forward, with having cut their ask from 4.3 to 2.7. But, I think, at least, and the other piece of this with this particular project, the highest end hotel generates the most bed tax.
Right.
The risk of an IDA project is you approve one and it could have been, the next one that came in could have been better. There's no way that someone putting an antique shop on the first floor and apartments upstairs is going to generate more revenue to the city. There's no way that 4 upscale $800,000 condos converted into that building are going to generate that kind of revenue for the city. And so, and do we have enough hotels? That was one of the other arguments. I did a quick study. What is the price I could rent a hotel room on the second Wednesday in March in Hudson, and what's the price on the 4th of July? And we have 197 hotel rooms in Hudson right now. And I stopped at the Whaler and the Nest. There are a lot of other people who advertise as hotels, but they're really Airbnbs.
Yeah.
And this will add 40 rooms. And there's only, there's 100, or there's 55, I think, or 60 at the St. Charles at the lowest end. And at the highest end, there's only the 8 rooms at the Maker. So you're gonna have 48 rooms. It's a perfect bell curve when you look at St. Charles at the low end, the Maker and this hotel at the high end. And then you've got the Wick, the Rivertown, the Whaler.
What about the Hudson Public Hotel? They've started that, but have they said when that's?
No, they came in to see us last week. They want to do a 40 room
Right.
down on Warren Street. That's not even been, I guess they have their planning board approval.
Okay.
But, so, I think that it can be criticized, but in the end, I think, I didn't want to see them get more than the Pocketbook Factory, because that's not fair to the last person in, gets more.
Yeah.
But it was, it's the only time I went into a government body board meeting where I didn't know whether it's going to be 4-2 one side, 4-2 the other side, or 3-3.
Yeah.
We had a 2-hour meeting. And, for all the reasons I just explained, the city council, incoming city council president, who's the majority leader of the council, and the mayor voted no. I put my own thoughts on, what their motivation was, but.
All of these those properties, right? All of them, Philmont, here. They're always causing a lot of controversies, and it seems ironic that, back when nothing was being done in them and cats were living, in the Pocketbook Factory, like back in the day. Just seems ironic, like nothing was actually happening. And then when she passed, I think it was a little unexpected and all the properties were in flux. I know I was like almost getting a property of hers, buying it for very cheap, and just seems, was anyone complaining about them at that point? Like when you first, no, okay.
Well,
Just now that they're being, because is there any other people willing to come into that Philmont Villa, for example, or that
Felicia?
was her, no, the Philmont?
Philmont.
It's like, is anyone, those are such intense, costly projects like the Pocketbook Factory, so even to find a serious
Well, the Elks Club,
person to develop it.
Love a problem with it being a hotel, right?
the Elks Club had been out of,
Yeah.
the Elks Club had been out of there for 10 years.
I cleaned that out
They're saying-
so long ago, like, and nothing was happening.
She had a bedroom there that she stayed at once in a while.
And the average person, an average resident does not.
Yeah.
At all.
And the other property she had is a tennis
Yeah.
facility which Galvin wanted to build into a event space.
Several in Philmont she found,
New York City, yeah.
But you know, we have criticism, kind of from a fact that we're managing the IDA, but we're also CEDC, so I wanted to just, give you.
Whatever happened with, John L., like,
That, we got that approved.
okay,
For
senior
again, they
housing.
wanted to pay 2% of, rent. We got them to 5%. They're used that to apply for a state grant, and we're hoping they'll get the state grant
It's
either
gonna be senior housing?
this round. It's 60% of median income senior housing,
Okay,
60 some units.
Great.
okay, so now they're applying for a grant.
Right.
To see.
Now, if you take the projects that have been done, the IDA in Hudson now has $800,000 in the bank. Now, they want to start to see how they can use that to benefit the taxpayers. But when we got involved with them, they had $40,000 in the bank. And so the work that CEDC has done over the past 10 years to move forward with the food processing business, the Galvin Housing Project, the Pocketbook Factory, and the Providence Hall and Skylar Court Apartments, and now the Crescent, has generated IDA fees of $800,000. The J.L. Edwards and the Elks Club are both $40 million. So that would generate another $800,000 if they go forward. And I don't know if any of you have been to the Pocketbook Factory since it opened, but my understanding is they're doing very well on weekends, and the food and beverage facility is packed all the time. And that may be a novelty.
What did they turn it into?
It's a hotel and
Okay,
restaurant.
hotel room.
Okay. Last. The county has asked us to help them market 604 State Street. It's the building behind us where had been the first Hudson High School. And they have probation and public defenders, I guess, and other people in there. They're going to move those people ultimately to 11 Warren Street. And you know, again, the idea is not to transfer it to us and have us market and sell it. The idea is for us to coordinate with hiring, do an RFP for a broker, and you know, begin the process and oversee it for them, the sale of the building. I know there was some concern because one of the likely bidders previously would have been Galvin. And you know, I think there was some board concern that you know, we didn't want to take on unnecessary controversial projects. I suppose this could be controversial to anybody, but there's not a lot of residential in the immediate vicinity. Unfortunately, I think its only use is converted to upscale apartments or to a hotel. I think it's I haven't been in it, but my understanding is it's in pretty rough shape. So again, we're not at a point yet where we're taking any action, but I would expect by the January meeting, I just wanted to give you some background on it so that if we do need some approvals, we're not in a situation where it's a first item of first impression for you.
Thank you.
And ultimately, finally, Jim signed almost 100 membership renewal letters, and the next shortly we'll have the prospect letters. And I did get some press on the sale of the Ginsburg food business. It's always great to be available to them on a Friday at 3 o'clock because they, you know, they're not going to try to find anyone else. And I tried to keep it where we were recognizing the success and contributions of the Ginsburg family to the community over 116 years, and not address the questions they asked about what will happen to the building and the employees. We'll leave that for another day. So, and then we did go to the Holmes Farm with Senator Schumer, and they always say never get between Senator Schumer and the camera, so may have seen me in the paper taking his picture. He was very gracious. He singled me out in his opening remarks and he's everywhere. Well, don't tell the people in Columbia County.
Well, 2 days later, Trump did the big thing about home nuts, so I thought that was like a Schumer Trump like crossover that we didn't expect, so. Positive.
So all those kids will get cholesterol like I have. Thank you, Mr. Chairman.
Thank you. We need to back up a little bit. I need a motion to approve the treasurer's report, please.
So moved.
Second.
All in favor? Anyone opposed? Carried. The minutes of the November meeting, anyone with changes, any issues?
Motion to approve.
Second.
All in favor?
Aye.
Anyone opposed? Which is carried. We need to enter into executive session on a loan matter and on personnel matters related to the search. So I'll entertain a motion to enter executive session now.
Motion.
Second.
All in favor?
Aye.
Motion's carried. Thank you.